going on, traders and investors? Bennett Tyndall with tradinganalysis.com. Today is Thursday, May 6th, 2021. We're taking a look at the S&P 500. So our last video update, I do apologize that I didn't get one out to you last week. We've been in some consolidation, which we're continuing to view as constructive for continued upside in the higher degree trend. So let's take a quick look at the April 22nd video. So back on April 22nd, we were tracking one of two counts. The first count basically said that the wave 3, which would pair up to this move here, was not yet complete. We gave you guys the alternate, which said we're still actually in consolidation in that fourth wave, and that gave us an area of resistance here between 41.91 and 42.18, which was the 127.2% external retracement. From there, we said, okay, if that holds, look for continuation back down to the 4100 area to complete this fourth wave, because we would need a fourth wave to pair up to this wave number 2 to entertain upside trend resumption. So let's take a look at today's price action. So what ended up happening, if I go ahead and just draw this out for you, if we draw a retracement of this decline, and what we're going to go ahead and do is I'm going to add the 1272 external retracement, and you'll notice that 1272 external retracement at 42.11 is in fact where price action has run into resistance. The good news is we haven't seen any impulsive activity to the downside, which means that this sideways pattern is still a correction, part of a higher degree trend, which still has upside price implications. So I wouldn't suggest that the markets are ready to collapse and this is an all-out breakdown. I, in fact, am continuing to remain constructive and bullish, and I do think that we have further upside left before we're faced with the typical and traditional summer consolidation. So the way we're viewing this now here in the S&P is either an ongoing wave 4 triangle, and this is actually quite appropriate given the directionality that was exhibited in the wave 2 correction of the same degree. Back on the March 27th video, we said wave 2 was likely complete. We were looking for wave 3 upside objectives. We met our first objective at 41.23. We have yet to ultimately reach the 4300 handle, which remains one of our longer term targets. But what's interesting about the April 19th, which was Monday, the April 19th third wave completion, is that took place just outside of the traditional 161.8% time extension of wave number 1. Oftentimes you will see that relationship unfold between the third wave and the first wave, where you meet the 1618 price objective into the 1618 time objective. So we didn't get there in price, but we got there in time. Inside of orange wave 3, we have 5 smaller waves which do pair up to one another. You have a sideways correction in 2, and you have a very directional fourth wave correction, which did pair up in price to the wave 2 of the same degree. Notice inside of orange wave 3, we met the smaller degree 1.618 objective at 4150. That 4150 1618 gave us the move down, paired up the wave 2. We got the wave 5 up to the 1272 external retracement of the wave 4 decline, or just over that. And now we're sideways in consolidation. We see this sideways consolidation as down in A, 3 up in B, down in C. Here's 3 up in D. We'll be looking for E to carry us back sometime into early next week. From there, we'll be entertaining upside resumption. Wave count invalidation and wave count invalidation in the triangle simply means that if we breach that level to the upside, chances are this orange fourth wave is anchored and we're resuming the upside trend. That will come in the minute we break through the blue B wave high at 42.1878. But for the time being, we see this as an Elliott wave triangle, traditional lower highs and higher lows. Now, you can see the alternate count here would say that orange wave 4 is anchored and we're resuming higher. This is our fallback plan in the event we do not see further consolidation. Now, the one caveat to all of this is the Nasdaq. And inside of the Nasdaq 100, we've seen a correction that more or less would pair up to the wave 2 of the same degree. you could suggest wave 3 completion either off the April 16th or the April 26th high. Regardless, your wave count and validation level is going to remain the same. Wave count and validation simply means that we can no longer view this as an impulsive 5-wave structure, and that the move here into the highs was in fact a 3-wave trend, which means we have further downside work to go back into the 12,000 handle in the Nasdaq. The only way I'll entertain the count that says we have further downside is if we break that 13,291. If we hold 13,291 and start to resolve higher, we'll look to ink out the completed triangle in the S&P, and we'll look for upside resumption in the Nasdaq. If we break through the invalidation at 13,291, we have no choice but to view this entire pattern as a flat. And this would be 3 waves down into March 5th, 3 waves back, and now we're going to be working 5 waves lower. Again, this is an alternate. This is only in play in the event we break through the invalidation levels. Over to the XLK, which is the S&P tech sector, you've got a very similar wave count at work. Either this is all of wave number 4 pairing up to the correction into the March 25th low. Wave count and validation here, 135.09. We typically do not want to see corrections of the same degree in an impulsive structure come anywhere close to one another. So the fact that we don't have isolation here is a little bit concerning. And again, just like the Nasdaq, if we do break through invalidation in the XLK, look for C wave, an impulsive C wave structure. Over to semiconductors, the SMH ETF that we like to track, we unfortunately already have the overlap. You'll notice if I were to just draw a trend line over the top of the A wave, I'll bring in a little bit of a price box for you guys. We've already overlapped. So this can't be 1, 2, 3, 4, 5. This also can't be 1, 2, 1, 2 because that would present a massive degree violation. So that leaves us with 2 options. Option number 1 is semiconductors are already inside of the flat that we're looking at as a possibility in the Nasdaq and the XLK, or this is simply an Elliott wave triangle, higher lows, lower highs, with ultimately a resolve to the upside. Now, let's go ahead and wrap it up and taking you back to the S&P, because you might be asking yourself, well, Bennett, if you're expecting or considering the possibility that we breach invalidation and turn this into a flat in the Nasdaq, what on earth is the wave count in the S&P? Well, taking you back to the S&P, you'll notice here in the wave 4 position, the wave 4 correction was not equal to wave 2 in price. And that's fine, but this also gives us the possibility for additional moves to the downside. So if the Nasdaq breaks invalidation, look for this possibility in the S&P. And this possibility in the S&P basically says that the wave 4 correction is not complete. It's not a triangle, but in fact some sort of a complex. And you're going to move all the way down here into 40.75 or 40.80. But for the time being, the sideways consolidation remains healthy. We will only refer to this possibility if the Nasdaq breaches invalidation. Clearly, a lot going on in the markets right now. I know I threw a lot at you in this video. You can check us out at tradinganalysis.com if you're interested in learning more about Elliott Wave. We have several courses that walk you through it from the ground up, and we've actually got another very interesting project in the makings. We can fill you guys in more on that later. So thanks again. I hope you enjoyed the session, and I'll see you guys next week.